Okay, so just a quick update here on Euro NZD. So as you know, if you remember from the last analysis, which I'm linking here below, what did we expect? After an overextended information, we expected the market from here, from lower, basically to start a push to the upside. After, on the 4-hour time frame, the market would have shifted from a bearish market to a bullish market. Now the market has shifted and it has started this very nice move to the upside. Now, if you have found a good entry inside of this area, now at the moment you are running in some very good profits and the market is exploding to the upside, probably you're already risk-free on the trade. But no matter if you are already in the trade or if you didn't enter this opportunity to the upside, there is another opportunity to be capitalizing on here on Euro NZD probably next week. So let's speak about it. Now, just a quick recap basically from a technical perspective of what we have on Euro NZD. Let's start from the monthly time frame. Now on the monthly time frame, clearly we have a market that had created this overextended W formation. After an overextended W formation, what do you expect? You expect the market to make a retracement. Now the market has given the retracement. You can see it also from a weekly perspective. The market not only has gone for a retracement, but also for a retest of which level? For a retest of this previous resistance, now turned support. The market hit it precisely and now is starting a nice move to the upside. Now, if you want to measure this retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And what you can see is that the market buyers basically are trying to protect the 0.618 golden ratio with a weekly close above the area. So basically confirming that all this wick to the downside was just a fake move that happened for the week, but the actual close will be above the 0.618, so respected still as the support. Now, from a daily perspective, okay, how can we be capitalizing on the move where we're supposed to be looking for a possible opportunity for the best risk to reward and the best probabilities? Because as you know, trading is all about probabilities and risk to reward. But first of all, let's go and see, let's go and give a quick check at what we have from a COT perspective. So what hedge funds are doing at the moment on the Euro and on NZD. Now, we will have the new data come out today, so we will see basically what that will bring. But at the moment, from where we are speaking now, the situation is very simple. From a Euro perspective, we have a lot of longs added, not backed by some proper basically shorting. So basically definitely longs outweighing shorts. In fact, net positions increasing from 86 from minus 86k to plus 87k, so 100k more in net positions, bringing the longs way more than the shorts. In fact, we have 170k longs and 83k shorts with a 31.2 long exposure from an institutional level. And if we go and see what is the situation from an NZD perspective, what we can see is that overall net positions from an NZD perspective remaining more or less the same, increasing from minus 20k to minus 14k, but overall we haven't seen proper longing. In fact, NZD has now basically made also a minor push to the downside in strength. Now, what we can expect from a technical perspective, if we go back and see what is the situation, we can basically be looking for a very simple pattern, because if the market makes a move to the downside, then goes back up, creates a lower low, and then creates an equal high, what do you expect? You expect the market to create an inverted head and shoulders, okay? So if the market will continue a little bit higher, which would be great, at the start of next week, it will find some kind of strong resistance here from a daily perspective at the previous high. From here, what do we expect? We expect the market to give us a retracement, and this is the area in which we will be looking for the best probabilities and best risk to rewards. And definitely what we will be doing with students inside of this area, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bearish market to a bullish market, because on the 4 hours the market after this retracement will be bearish. And then we will be waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities. So no matter if you are already in a long from here and you want to compound, or if you didn't take the long and you want to basically be looking for the next capitalizing opportunity, this is where probably we will have the best risk to reward and best probabilities for the next move to the upside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.